All right, ready to dive into some market trends and have a little geopolitics mixed in?
Sounds good to me.
Think of this as like your cheat sheet for navigating the world of finance right now. We've got this really in-depth financial briefing that came out on February 3rd, 2025.
Okay.
And let me tell you, things are getting interesting.
Interesting, yeah.
Things are getting spicy.
That's
It's funny.
spicy. Yeah, I think that's a good word for it. What I find really fascinating is that we're seeing this kind of unusual divergence in how investors are feeling right now.
Yeah.
Some sectors are doing really well, others are kind of tanking, and it seems like the usual correlations are kind of breaking down. It's unusual.
Yeah, exactly. It's like a split personality in the market.
Yeah.
So let's look at a snapshot of where things stand with the major indices. The briefing lays this out as of February 3rd. So the S&P 500 is down slightly. Dow Jones took a pretty big hit, but the Nasdaq actually edged up, didn't go down. What do you think about that? What's with the split?
Yeah, that's the million-dollar question, isn't it? I mean, the fact that the Nasdaq, which is very tech-heavy, is holding up so well while these more traditional indices are kind of faltering, it really suggests there's a shift in investor confidence.
Yeah.
It seems like there's a growing belief that some sectors, tech in particular, are just more insulated from the economic headwinds that we're seeing.
Okay. Interesting. And even within the tech world, we're seeing this play out in the crypto markets too. Bitcoin dipped a bit, but Ethereum took a pretty significant hit. What could explain that, do you think?
Well, with Ethereum, I think we have to look beyond just the usual market volatility explanation. There have been some concerns, some whispers about potential scaling issues and delays with the rollout of Ethereum 2.0. So, those concerns, plus the broader market uncertainty, I think that could be weighing on investor sentiment. Remember, the crypto world is still very much driven by, speculation and news cycles.
Yeah.
Very reactive.
Okay, so tech overall is showing some resilience. But it sounds like there are still pockets of vulnerability, especially in more speculative areas like crypto. Makes sense. But this idea of tech resilience really jumps out at me from the briefing. They talk about how major tech companies have had some really strong earnings.
Right.
And there's continued growth in areas like cloud computing and AI. So is this a sign that tech is becoming the new safe haven for investors?
Well, it's certainly possible. I mean, think about it. The demand for cloud services and AI technologies, those are only accelerating. And companies at the forefront of this digital transformation, they're the ones reaping the rewards. And what's interesting is that this isn't just happening in the US, it's a global trend.
Yeah.
We're seeing significant tech innovation and adoption in Europe, Asia, even emerging markets.
So this isn't just about Silicon Valley anymore. It's about a global shift towards a more digital economy.
Exactly.
That makes sense. But let's pivot a bit and talk about something that's maybe a little less fun. Geopolitics. This briefing mentions, specifically, the recent tariff announcements from President Trump. How is this impacting the market? How is this shaking things up?
Well, tariffs can have a really significant ripple effect throughout the economy. The briefing uses the transportation sector as a good example, actually. So companies like FedEx, Norfolk Southern, and CSX, which is a major freight railroad company, they're actually facing downgrades because of these tariffs.
Yeah, I mean, it's not hard to see why, right?
Right.
Tariffs essentially make goods that are imported more expensive, and so that can lead to decreased consumer spending.
Right.
Which can then lead to less demand for shipping and transportation services. It's like a domino effect.
Exactly, a domino effect. And what's maybe even more concerning is the potential for retaliatory tariffs from other countries, right?
Oh, yeah.
This could escalate into a full-blown trade war, which would disrupt global supply chains and just create even more uncertainty in the market.
So while some industries might benefit from these tariffs, at least in the short term, the long-term consequences could be pretty damaging. Are there any potential winners, though, emerging from this trade war scenario? The briefing does mention steel stocks as a possible beneficiary.
Yeah, that's true. Domestic steel producers, they might see a temporary boost as imported steel becomes more expensive, but it's a risky bet for investors. If other countries retaliate with tariffs on U.S. goods, it could really wipe out any gains made by the steel industry.
So tread carefully in the steel market. What about e-commerce, though? Are there any clear winners or losers there as a result of all these trade tensions?
This is interesting. The briefing highlights a pretty surprising development. It suggests that the end of the de minimis exception could actually benefit e-commerce giants like Amazon and Etsy.
Okay, now for our listeners who don't speak, fluent trade policy, what exactly is this de minimis thing and why would its demise be a good thing for those companies?
Right. So the de minimis rule basically allowed smaller companies, often based overseas, to ship goods worth under $800 to the U.S. without paying import duties.
Oh,
This gave them a significant cost advantage over larger companies. So by ending this exception, it creates a more level playing field,
okay.
which could give those giants, Amazon, Etsy, a competitive edge.
So those smaller players who are relying on that duty-free loophole are now facing higher costs, but the big guys are relatively unaffected. That's really interesting. It seems like no matter where we look, these trade wars are creating winners and losers in unexpected ways. But what's clear is that these U.S. policies are having effects that go way beyond our borders.
Oh, absolutely. The global economy is so interconnected.
Yeah,
Any major policy change in one country can really send shockwaves through the whole system. I mean, think about it.
yeah.
We're talking about a global web of interconnected economies, and things can change really rapidly. So it's fascinating to see these trade tensions playing out around the world. The briefing highlights what's going on in European and Asian markets, and there's a real mix of caution and optimism.
Yeah, it's like the whole world is kind of holding its breath, waiting to see what happens next. So Europe first. What's the mood like over there?
Well, European markets seem to be pretty cautious. They're watching these trade developments closely because, of course, Europe has strong trading relationships with both the U.S. and China.
Right.
So they're really in a wait-and-see mode as they figure out how these tariffs might impact their economies.
Makes sense.
Germany, for example, which relies heavily on exports, is particularly sensitive to any disruptions in global trade.
Yeah, they're kind of caught in the middle. What about Asia? They've been growing like crazy for years now.
hmm
Are they feeling the pressure too?
It's interesting. The briefing actually suggests a more positive outlook in Asia. While they recognize the challenges, countries like China and India are still seeing really strong economic growth. They seem to be handling these global shifts with a little more confidence.
I wonder if that's partly because they've been working on diversifying their economies and focusing more on domestic consumption. So maybe they're not as reliant on exports as some other areas.
Yeah, that's a good point. China, especially, has been making a big effort to shift away from export-driven growth and towards domestic consumption. That could make them less vulnerable to the downsides of these trade wars.
So it sounds like Asia might be able to ride out this storm a bit better than others. But zooming out for a second, beyond the immediate effects on certain sectors or countries, what are the long-term implications of these trade tensions? What are the bigger picture consequences?
Well, one of the biggest worries is that these trade wars could really weaken the rules-based system of global trade that we've had for decades.
Right.
This system, which is mostly run by the World Trade Organization, has been really important in reducing trade barriers and promoting economic growth around the world.
Yeah.
But if countries start to abandon this system and go back to protectionist measures, it could lead to a more fragmented and less efficient global economy.
That doesn't sound good.
No,
It's like taking a step backwards to a more uncertain and volatile time.
right.
Okay, so we've talked about tech, trade wars, and global markets. What else is in this briefing?
Well, let's look at a couple of key sectors that are often overlooked, but they're so crucial to the overall economy: energy and financials.
Yeah, energy and financials. They might not always be the most exciting topics, but they're definitely worth paying attention to. So what's happening to the energy sector?
Well, the briefing says oil prices have been pretty stable recently, which is good news for both producers and consumers. Stable oil prices can help keep inflation in check and provide some predictability for businesses that rely heavily on energy. But, and this is a big but, those geopolitical tensions we talked about earlier could easily disrupt this stability.
Yeah, it feels very fragile.
Yeah.
Any disruption to those major trade routes or any political instability in oil-producing regions could send prices through the roof. It just highlights how interconnected everything is.
Absolutely. And how sensitive the energy market is to global events.
Exactly. Okay, so then there's the financial sector, which is always a bit of a roller coaster. With the Federal Reserve constantly adjusting interest rates, it seems like banks are constantly trying to find the right balance between making money and managing risk.
Right. It's a tightrope walk for them.
So break it down for us. What's the impact of interest rates on banks? Is it good or bad for them when rates go up?
Well, it's a bit of both, actually. On the one hand, higher interest rates mean banks can make more profit on loans. They can charge borrowers higher interest rates, which bumps up their revenue.
Okay, that makes sense.
But higher interest rates can also slow down borrowing as people and businesses get more hesitant to take on debt, and that can impact the growth of a bank's loan portfolio.
So it's this balancing act for them. They need to find that sweet spot where they can maximize their profits without choking off lending activity.
Yeah.
But with all the volatility in the markets right now, are there any good opportunities for investors? I mean, this briefing seems to suggest that even with all this uncertainty, there's still good opportunities out there.
Absolutely, there are. And the briefing points to a really interesting example. The shift towards renewable energy and sustainable practices. This isn't just a fad, it's a fundamental change that's reshaping entire industries.
Oh, wait.
And that's creating a whole new world of investment opportunities.
I like that. As we transition away from fossil fuels and embrace cleaner technologies, the companies at the forefront of this change are going to be in high demand. So investors who get in early could see some significant returns.
Exactly. And it's not just about the financial returns, it's also about aligning your investments with your values. By investing in companies that are working to build a more sustainable future, you can make a positive impact on the world while also growing your portfolio.
It's a win-win. But let's be honest, with all these complex factors at play, it can feel pretty overwhelming to even know where to start. What advice would you give to investors who are feeling a little lost?
Well, first of all, don't panic. It's easy to get caught up in all the headlines and make impulsive decisions, but that's rarely the best approach.
Yeah.
Instead, take a step back, focus on your long-term goals, and remember that ups and downs in the market are normal. It's a part of the cycle.
Don't let the noise distract you from your long-term vision. But how do you actually cut through the noise and figure out which opportunities are worth pursuing?
That's where research and due diligence come in. Take the time to really understand the companies you're considering investing in, their business models, who their competitors are, and their long-term growth potential. Don't just follow the crowd. Do your homework and make informed choices based on your own risk tolerance and your own investment goals.
Okay, research, stay calm, focus on the long game. Got it. But I think we need to go a little deeper. This briefing has so much more to offer, especially when it comes to identifying those hidden opportunities that most investors might be missing. Okay, so welcome back. We've covered so much in this deep dive, everything from the surprising resilience of the tech sector to the, those global ripple effects of these trade wars.
Right. It's been a lot.
But before we wrap up, I want to leave you with one last takeaway, something really, something to think about, as you're out there in the world of finance, trying to make sense of it all.
I like it. Give me something to chew on. What's the big takeaway?
Okay. Well, this briefing really got me thinking that, the financial world, with all its complexities, all the jargon, it really boils down to human behavior. It's a reflection of our hopes, our fears, our dreams, our decisions, all playing out on this massive global scale.
That's so true. We get so caught up in the charts and the graphs and all the numbers that we forget there are actual people behind every single market move.
Yeah.
Every decision to invest is ultimately driven by human psychology, isn't it?
I think so. It's like this giant social experiment where we're all trying to predict the future, make sense of all this chaos, and find those opportunities that everyone else is missing.
Yeah. Yeah.
So investing becomes more than just, a way to make money. It's a way to understand the world around us and our place in it. You start to see how everything's connected. Global events, economic trends, human behavior, it's all intertwined.
So for our listeners who, want to get into this, who want to be more than just passive observers, what advice would you give them? How do you start thinking like an investor? How do you see those connections?
I think it all starts with being curious. Don't just take things at face value.
Yeah.
Question everything, dig deeper, always be asking why.
I love that. Cultivate that skeptical mind, that thirst for knowledge. Don't be afraid to challenge the conventional wisdom and look for those hidden patterns that others might be missing.
Yeah, exactly. And read a lot. And I don't just mean financial news. I mean, explore history, psychology, sociology, even philosophy. The more you know, the better equipped you'll be to understand the forces that are shaping the market.
That's such a great point. It's really about connecting the dots between different fields. Who would have thought that understanding human psychology could give you an advantage in investing?
Right. And also, really important, don't forget critical thinking. We are just bombarded with information all the time. It's essential to be able to filter out all that noise, figure out which sources you can trust, and then really evaluate all that information objectively.
You really have to think for yourself. Do your own research. Don't just blindly follow the crowd. You have to make your own informed decisions based on your own analysis and your own risk tolerance.
So, to sum it all up, stay curious, challenge assumptions, read widely, think critically, and just never stop learning. The world of finance is huge and it's constantly changing, but if you have the right mindset, you can navigate it confidently and, maybe even have a little fun along the way.
Well said. I think that's a perfect note to end on. Remember, everyone, the market is a reflection of us, all of our collective hopes and fears. And so by understanding ourselves and the world around us, we can become more informed investors and I think better decision makers overall.
Absolutely, yeah. Well, thanks for joining us for this deep dive. Until next time, keep exploring, keep learning, and happy investing.